Hey, Derek, Keet, Remax Elite. So today we've got Phil Jungwirth with us again.
Hello, hello.
So the question is, like, basically, can I afford, what can I afford, right? That's the basic question, but trying to say, okay, if you want this much of a mortgage, generally, how much do you need? How much income do you need, or where does it kind of sit? Because, like, with prices going up and down and the market, a lot of people are kind of just lost, right? And when the bank kind of crushes down, we've had a lot of people recently, a lot of buyers that have been surprised. They've kind of gone in and said, well, oh, I thought I had good credit. Why didn't I qualify, right? So today you just kind of want to shrink it down and get more of an idea. Like what are you looking at? What is the general idea? Like if your income bracket is here, you're kind of expecting around here, or you're trying to kind of narrow the stuff down a bit.
For sure. So we look at a number of things, but if we're looking at strictly income-wise, and let's say you're just putting down the minimum for 5%, because not many people have that 20% down payment yet. So if we're looking at 5, maybe let's say even 10%, you're looking at around 4 times your income. So if for a $300,000 home, you're looking at roughly $75,000 of income. Now, this is with zero debt. If you do have any debt, us mortgage people, we look at payments. That's the biggest thing for us. So for every $100 payment, let's say $100 monthly payment, you're lowering that mortgage amount by around $10,000. So if you had a $400 a month payment with $75,000 income, that $300, because you had a $400 payment, turns closer to that $260 amount. And then I know in Edmonton, then it gets kind of tricky, because around $260 you get into that condo kind of townhouse style house, and then that actually lowers because you have condo fees now. So this is just a normal house for qualifying. 4 times your income is a generally good rule. As far as credit goes, we kind of want 680 credit. A lot of bank apps have soft pulls available that you can use. If it's around 680, then you're good. A little bit lower, we can still work with it. But if it's under 600, then you're probably wanting to increase that, or at least have 20% down. And there's some little tools that we can use there. And then as far as credit goes, we want at least 2 pieces. That's a big one for first-time home buyers. Sometimes people think less credit's good, but we want at least 2 pieces. So 2 credit cards, a credit and a car loan, a credit and line of credit, credit card and a line of credit, sorry. But those sort of things. Really.
And when you say 300, for example, you're saying 4 times. So if you're at, like, you want to buy something that's 300,000, are you saying the mortgage amount is 300,000, or you're saying the amount of the property is 300 minus the deposit, or where?
So the amount of the property would be around 300,000.
Okay, so 4 times.
4 times your income.
Obviously, if you're buying multiple properties, then it gets a little bit more complicated, or if you've got different properties. But
yeah, by and large, that that $100 a month payment limits your 10,000. That's a good rule. These are standards. They're not permanent, so it's always good to check with your mortgage advisor for firm numbers, but this is a general just calculation that you can do at home.
Let's say you have enough cash there. How does that offset the amount that the banks will give you? Like, are they looking at more just the payment?
Yeah, so they're usually looking at more than just the payment. If you are able to put 20% down, then there's a lot more programs we can do, and it's a lot more adjustable, and then we can almost increase that amount by 20% when you put 20% down.
So let's say you've got 20% to pay down,
yeah,
and you're buying that $300,000 home.
Mm-hmm.
Now, where does that leave where should your salary, or where should where should that be at that point?
Your income's gonna be, I would say, around 60,000. It's closer to 5 times your income. So you get another 20% there. Single family around 490, I would say. So
you're looking
if you have 20%, if you have 20% down, you could probably get away with 100K income. If you do not have 20% down, around 125,000 for your household income on a Yeah, because that would get you at 500, so a little less than 125.
Yeah, perfect. Awesome. All right. Well, thanks. If you have any other questions, leave them in the comments below. Like, subscribe, give us that thumbs up.
Cheers.
Thank you.